Kirk Duckwall here with your Twin Cities Real Estate Agent News. In this update, we're going to be going through the change, the shift in new construction that we're seeing and expecting to continue, as well as why we're off to a sluggish start and where that might be going, along with all of our normal stats and trends. But first, let's talk about a couple quick classes that are coming up here. These are open to all. This one is a deep dive into mailers. The title is a little bit more simple than the class actually is. We're going to get into hyper targeting investment sellers, downsize sellers, upsize sellers, which are turning into buyers as well as expanding your sphere. So this is going to be a high level deep dive into really getting the most out of your dollars you're spending on your time and for those mailers. Another class that we have now, that one first is coming up on January 20th. That'll be in St. Paul. I'll have a link for more details on that one. Also, realtor tax basics. So yeah, big thing here, deductions and planning for that. Kind of, again, a deep dive into your taxes and what you want to be taking advantage of. That's going to be Maple Grove on the 22nd. Again, I'll have a link for that class as well, and both of these classes are open to all. All right, let's dive into some of the market trends here, starting off with closed sales in December. All right, we saw a positive trend there, up 2.2%, going from 3,310 up to 3,432. We'll talk about that more in a little bit. Where we saw news not so great, pending sales down almost 10% here in ending up in December. So going from 3,110 down to 2,361. So this is much more in line in what we saw in 2022. Looking at our showings per week per listing average, nice jump up there, went from a 2.37, this is in the median sale price range, kind of between 250 and 500K, 2.37, up to 2.99. However, down 23% in comparison to last year. Total showing activity down as well, about 16%, but we did see a week over week rise, 1,182 up to 1,759. So again, down 16%. Views on the 14-day view on the MLS, we've seen some nice trends there going up as well. Days on market starting to recede a little bit after peaking out at 52. Obviously, we're in January. That could pop back up, but it goes down to 50.8 and currently running cancellation rate of 9. All right, looking at where the market meter currently sits here. Market meter is now at a 2.83, so still in that buyer's market range, but that is shifting quickly, and we'll talk more about those changes in the market meter in a second. The bond market has been relatively flat, but some news about mortgage-backed securities being bought has shifted rates a good amount. So we saw rates in the last update around 6.25. We're now much closer to 6%. Okay, I talked about new construction. New construction is projected to actually decline by 2.9% nationwide. So this could tighten up that inventory. We may start to see, if buyers do jump into the market with the lower interest rates, that becoming more competitive, especially if interest rates drop as well. So if we look at total home sales, looking at new construction, we can actually see, yeah, those numbers are starting to decline there. And as projected, they will continue to decline. So a story we're going to be following on that. Now, I mentioned about the slow, sluggish start. So we talked about the pending sales. Well, if we go back to the closed sales that we saw, that things were on the rise, that buyers took an early advantage of where the market was. And we saw them insert themselves into the market. The application rate was higher, and we saw them just jumping into homes, getting into them in December. So we are seeing things kick off a little bit slower. So when we look at the market EKG, we saw that big application rate here. And then we saw a really big reduction in inventory of homes. So we ended up seeing the month supply go down to 1.9, so lower than where it was last year, a tightening inventory. So buyers really hopping on there. I think it was at 2.5 going down to 1.9. So taking advantage of that inventory when it was there, snagging those deals. Now we are seeing the market meter on the rise. And so we were at a 1.94. So that's absolutely in buyer's market territory. And once it hits 4, that's stable market. Currently, we're sitting there at a 2.83. If we look at the forecasts on that, with the new data, with that slower start, the projections that we're seeing is actually the market lagging a little bit and pushing that peak out into the mid-April timeline, but still peaking higher than it was last year. So 7.39, well into seller's market territory, but not as early as we were projecting before. Hopefully you found this information valuable. Again, check out those classes. I'm going to put a couple links below. Take care and have a great rest of your January.